Good morning. Welcome to the XM.com weekly market update. And joining me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Getting into the silly season.
Yeah.
But plenty of data still this week.
Exactly. Only 3 weeks out till the start of 24.
I know. It's
2 weeks to less than Boxing Day.
That's right. It's been an interesting year to say the least.
Has it what? Hasn't disappointed.
No,
from
no,
a trading perspective.
No,
it's
very
been
much
incredible.
So let's start domestically again. We've got the employment numbers coming out in Australia this week. The unemployment rate is likely to tick up only slightly, but the full-time employment is expected to come in pretty much flat, which is interesting for this time of the year, considering you'd think a lot of employing would be going on.
You would have thought so with Christmas parties for restaurants, think of all of the hospitality side of business, summer, more consumption, and you've only got to see that as far as coffee shops and people are out in the streets. There's no shortage, beaches, and then retail sales and everything associated with it, even Uber drivers, so yes, you would have thought there would have been more demand from that picture of, unemployment.
Yeah, and I think with employment data as well, it can change.
It can be a little lagging.
Yeah, quite quickly as well. So we'll keep an eye on that when it comes out later this week. Over to Europe, there's likelihood they probably won't cut rates yet, but it's probably they're talking. I think the IMF came out overnight and said Q2 of 2024 is when the ECB will probably cut.
Yep.
And yeah, I think
could coincide with the Fed.
Well, that's right, and particularly considering the way the economy is over there, it's not in great shape.
No, it's far from it. This week, 60-hour window, we've got 60% of the globe's economy being decided as far as rate policy. You've got Sweden, Norway, Switzerland, big chance they're going to cut today, or cut in this week, ECB, the Fed and Bank of England.
A lot of numbers. Euro, CPI down, PPI down, and that just goes into the narrative of a fairly weak economy, which will translate into those lower rates.
Yeah, and PMIs are down, so all of that export-driven economy is going to be, I think, spluttering for a while yet for the old Eurozone. Yeah. Will you be getting your new 600 Benz this year?
I won't be, no.
You'll get it next year?
No, well, we'll see, yes.
We'll see, okay.
Need those interest rates to come down, Pete.
Yes, of course, Andrew.
Once again, staying on the inflation theme, the US inflation is saying it's going to come off only slightly.
Yep.
Whether or not it hits a 2 number, who knows? But they're anticipating, I think, 3.1.
Yeah, down from 3.2. Yeah,
but once again, all the indications are that is heading south, which plays into the rates narrative of no more hikes, and the talk of all these interest rate cuts in the US next year. It's pretty aggressive. I think it's probably too aggressive.
Overcooked,
yes. I think there's probably no doubt there'll be some easing of interest rates.
They're saying it's going to be 5 of them.
Yeah, which I'm not sure. I still think these central banks want to keep these rates, whether or not at the level they are now, but they want to keep them as high as they can for as long as they can.
Yes.
Just in case there's another black swan event.
Then it rebounds.
It gives them room to move.
Yep.
So we'll see how that plays out.
Which in turn is going to impact, I think, currency trading dramatically, because if you don't see those aggressive, and they're pretty much baked in, the market's anticipating that, then what's that going to do to King Dollar?
Yeah.
It'll spur it up. So, it's going to be a great year for currency trading, I would think.
Speaking of currencies, US dollar index. So
it's broken 104.
Yeah, so it's recovered a little bit. Yeah, but it's it hasn't changed massively from the start of the year. Really, it's slightly higher. But
103.80. I think it started the year and it's now at 104.10. So you see all the movements over a year, and this is not uncommon. And you see dramatic blowouts, and then you look at the whole picture and you go, wow, well, not much happened.
No, it's that's currency trading right there, isn't it? That chart.
That tells everything. And if you and have a look at that, I mean, that's a beautiful example. That July where we touched that 100, it actually went to 99.8, 99.7, and then boom, showtime. So there was the big sell-off in June, then the retracement, and then it was just an onward and upward all the way through to October, and then again. So it depends on how you trade. Some people are trading 4 hourly, 4 minute, 4 week, 4 month. That tells you a 4 month trend, July, August, September, October. Yeah, wonderful.
Yeah, it was a good run, that's for sure. Oil, once again, we've been keeping an eye on this over the last month or so. It is continuing to drop off. So
7 weeks of continual decline we've seen. This will be the 8th if it goes lower.
Yeah, and you're certainly seeing that at the pump here in Sydney, where the prices are considerably less, which is good for not only the consumers, but that'll feed into those inflation numbers as well.
Yeah, exactly.
So,
You're worrying about that. That's one of the big drivers of inflation. We know that. I'm curious to see what transpired. The word hasn't come out yet as far as the meeting in Saudi between MBS, Prince Mohammed bin Salman, and Vladimir Putin. And naturally, they want higher crude prices. So, and there's something bubbling away. Keep your eyes on it if you're a trader. Venezuela, of course, with Guyana. So they've got pretty much the largest reserves in the world, Venezuela.
Yeah.
So let's just see how that all rolls.
Yeah. And finally, something a little bit different. It's a world of debt, which is this is just government debt.
Yep.
One sitting at $97 trillion, which is, well, it's hard to sort of fathom really. But if there's something that could bring everything, all the financial markets unstuck in the next, say, 12, 18 months, it could be one catalyst, because at some point
there is an inflection point.
Yeah, it's got to get addressed.
Yep. And that, Andrew, it just says there in the fine print, a 40% increase since 2019. And have a look at the likes of Japan there, massive debt, government debt, and then Italy, Greece up the top. Singapore, as you mentioned, was certainly a surprise, and the old states holding a third of it. How it plays, there will be a judgment day one day. Someone is holding that debt.
That's right, yeah. And three countries there, the US, Japan and China, hold 60% of that government debt.
Yes, and if you look at the numbers, when you take that into consideration, you're talking about a US 350 million, China, say 1.4, so that's 175, Japan 100. There's the best part, and throw Italy in there and Greece. You're lucky to have 19% of global population, but you're holding the best part of 70% of the debt. It's the Pareto principle, the 70-20, the 80-20 rule is nearly, again, where the debt's being held.
Yeah, that's right. So at some point, you sort of think, how does it get addressed? Because it's just such an enormous amount of money. But
are they defaults?
Well,
Jim Rogers, I put my mind back, and he always, and you know of Jim very well, he's a great speaker with Bloomberg, and I had a lot of time for him. And I remember him saying and bringing up, will we see the demise of the Eurozone sometime in the early part of the 20s? Now, this was going back the best part of a decade or two, probably 2 decades ago. So nothing stays forever.
No, and it's probably fair to say, has the Euro been a success? Probably not.
No, probably not.
No. And it's just so difficult, particularly for those smaller nations.
Yeah, how do they compete
against
Germany?
Yeah, how do they manage their currency, or now it's one currency, but and an interest rate policy that caters for 20 nations or whatever it is. It's near impossible to do. So. But interesting sort of chart there, which gives you an overview of global debt.
Yep.
And once again, that's government only. That doesn't include everything else. So.
And derivatives, how they unwind.
Yeah. Oh wow. You don't even want to even think about that.
No. So we leave. Well, we've got a couple more weeks together, but it's been a wonderful year, and I'm very grateful for Bizfeed and for our global clients, Andrew. So we certainly enjoy this commentary and this opportunity. We can't wait to see how 2024 plays out, because it's an election year.
That's right.
And you've got, I think, a number of inflection points that could create, again, trading turmoil or mayhem, which, if you're a day trader, that's probably your best friend.
That's what you want, yeah. But we'll, next week we can do a bit of a recap of the year as well. So
yeah.
Good stuff. All right. Thanks again, Pete.
Cheers, Andrew, and thank you again.
No problem at all. And that's the XM.com weekly market update.